Welcome to our financial planning series, where today we'll be discussing charitable giving and tax deductions. I am joined here by Ken Dean, our Director of Financial Planning, and Dan Castle, our Director of Advanced Planning, who have extensive knowledge in the field. So let's dive right into it. Ken, Dan, many people have a desire to give back and support charitable causes. How do you determine if someone has charitable intent?
They usually are very passionate, and they are involved with organizations that they provide either money or their time.
So that's absolutely correct, Ken. The passion is essential. But in addition, it's important to assess your financial situation. And you want to be comfortable with what you're donating and not have a negative impact on your financial plan.
So that brings us to our next point, maximizing applicable tax deductions. How can individuals ensure that they're making the most of their charitable contributions?
Great question. So one thing, the first consideration is whether or not you're taking itemized deductions or the standard deduction. If you itemize, then you can add your charitable contributions to those deductions, and that can reduce your taxable income.
And if you do not itemize and you're taking what is called the standard deduction, you can be able to take a bunch of securities or a value of money to get a tax benefit in a vehicle called a donor advised fund, DAF. And that is a vehicle where you put in a significant amount of securities and you're able to take the tax deduction 1 year, yet take the money out to the charities over various years where you are not itemizing.
So for our viewers who are 70 and a half and older and own an IRA, there's another option called a qualified charitable deduction. Could you explain the benefits of the QCD?
Yes, so if you have an IRA, most people are not at age 70 and a half or older are not itemizing. So if they can use their IRA, $105,000 can be taken out, given to the charity. There will be no tax income from the distribution, but there'll be no tax deduction when you use that vehicle.
So that's a great way to donate in that situation. But if you do itemize, the QCD can still lower your adjusted gross income. And that, as we know, will reduce your tax bill and have positive impact on other tax calculations. And that's a win-win situation for both the donor and the charity.
So it leads us to our next topic. Some individuals own highly appreciated investments or collectibles that they're willing to donate. Are there any advantages of doing so?
Yeah, those are great items to look at for donating. Things that are highly appreciated, normally you have to pay a tax when you liquidate it, but if you donate it, you don't have to report the unrealized gain as taxable income. And that could be a big benefit in many cases.
And if you are taking that deduction, it depends if you're using cash or if you're using appreciated securities. With cash, you're able to deduct more based on your income than you would be if you're using appreciated securities. And the great thing is, I think, Dan, you mentioned, is that you don't have to report the income on that appreciated security. If it's got a basis, say, of $10,000 yet worth $100, you're deducting the $100,000 within limitations, yet not reporting the $90,000 of income.
Well, and not only that, but if the donated security is a big portion of your investment portfolio, those tax savings can help you purchase other securities, which can help you de-risk your portfolio.
Correct.
So let's talk about leaving a bequest to a charity in your estate plan. How does that work?
So with a bequest is you're giving it at the time of passing. What I like about that is that you haven't given it while you're living and find out maybe I did too much donations. So you're waiting at the end to give it to charity. There are certain assets you could use that Dan will explain when you're using a bequest.
Yeah, so instead of getting an income tax deduction today, there can be estate tax benefits for your heirs. So whatever you leave to a charity generally is going to be removed from your taxable estate. And then other assets like IRAs, pension plans, other things like that that don't receive a step up in basis when you die, in other words, your heirs have to pay the income taxes on it, those are great candidates for donation because then we don't have to realize income.
Those are excellent points. At the end of the day, it's important to consult with professionals who can help implement a strategy that aligns with your unique situation. So thank you both for sharing your knowledge today on charitable giving and tax deductions. And remember, when considering donations, think about your charitable intent, maximizing tax deductions, and exploring options like QCDs, highly anticipated investments, and leave and bequests. And as always, feel free to reach out, consult with financial professionals for personalized advice. Thank you for watching, and we'll see you next time.